When America's biggest bank reports its earnings, everyone pays attention. It's not just about numbers on a spreadsheet, it's a real pulse check on the entire US economy, from Wall Street all the way down to Main Street. So, we're going to break down their latest report and figure out what it's really telling us. So, the big question is pretty simple, right? How is this financial giant actually doing? And maybe more importantly for us, what clues can we pull from its performance about what's coming down the road for the economy? To figure that out, we've got to start with the headline figures. All right, first up, the headline numbers. And spoiler alert, they are absolutely massive. 2025 was a record smasher for the bank, and the fourth quarter was really the grand finale. Okay, get this. In just the last 3 months of the year, the bank pulled in a net income of $13 billion. To give you some perspective, that's more than $140 million in profit every single day. Wow. But as huge as that is, there's a really fascinating story kind of hiding behind this number that we're going to get to in just a bit. Now, if we zoom out and look at the whole year, the number is even more mind-boggling. $57 billion in pure profit. I mean, this wasn't just a good year. It was one of the best the firm has ever had. It just shows you the incredible power and scale of this institution. And what drove all that profit? Well, it was a record-breaking year for revenue. The bank brought in over $185 billion in total. And remember, that's the total cash that came in the door before a single expense was paid. Just a massive, massive number. So, a record year for revenue, a near record for profit. But where did all that cash actually come from? A bank this big is really like a collection of super powerful engines. So, let's pop the hood and see which ones were really driving this incredible performance. Okay, this chart right here tells a really important story. You can see the Commercial and Investment Bank, that's the CIB, which deals with huge corporations and global markets. Well, that was the profit king, bringing in almost half the total. Then you've got the part most of us are familiar with, the Consumer and Community Bank, the Chase branches and the credit cards in our wallets. This shows us that while consumer banking is a big deal, the real powerhouse for JPMorgan's bottom line is its Wall Street operation. So what was fueling that CIB powerhouse? It was pretty much all about their markets division. Just think of it as the bank's gigantic trading floor. Revenue there just surged, up 17%, because their clients were doing a ton of trading. Now let's switch gears from Wall Street to Main Street. The health of the consumer bank is a great sign of how the average person is doing financially. And the signs here look pretty strong. The bank added 1.7 million new checking accounts and a staggering 10.4 million new credit cards. That's a huge vote of confidence from everyday folks. And finally, let's check out that third engine, asset and wealth management. This is the part of the bank that handles money for the super wealthy and for big institutions. It also had a record quarter and now manages over $7 trillion in client assets. It's just hard to even wrap your head around that much money. The raw numbers tell one story, but to get the whole picture, you really gotta listen to the person in charge. The comments from CEO Jamie Dimon give us the strategy behind the data, and it's this. Well, it's a really interesting mix of confidence and caution. So first, you get the confidence. Dimon points out the firm's strong execution, how years of investment are paying off. He's clearly thrilled with the performance and feels like the bank's strategy is firing on all cylinders. But then, he immediately follows up all that optimism with a big dose of caution. Dimon is warning that the market might be sleeping on some pretty big risks out there, like geopolitical problems or inflation that just won't go away. This whole duality thing, celebrating success while warning about trouble, it's classic Jamie Dimon. So tucked away deep in the earnings report was this little note about a significant item. It's all about a huge new partnership, and it actually made the quarterly profits look smaller than they really were. Let's unpack this Big Apple bet. Okay, first, a real quick definition so this makes sense. A credit reserve is basically a rainy day fund. It's money a bank has to put aside today to cover any loan losses it thinks might happen in the future. Just keep that idea in your head for this next slide. So here's the crucial part. Remember that $13 billion profit we saw earlier? Well, that was after the bank took a massive one-time charge to build that rainy day fund for its new Apple Card business. If you just ignore that one single item, the bank's profit for the quarter would have been almost $15 billion. And the price of admission for this big Apple Card deal? A cool $2.2 billion set aside in that reserve.
So, while it looks like a hit to profit right now, what JPMorgan is really doing is making a huge bet that getting millions of valuable Apple Card customers is going to pay off big time down the road.
Okay, so after a record-smashing 2025, what does the bank think is coming in 2026? The company's own outlook gives us some of the best clues about where they believe the economy and their business is headed. This chart here shows their forecast for something called net interest income. Just think of it as the bank's core business. It's the profit they make between the interest they pay you on your savings and the interest they earn from loans. They expect this to grow, but only modestly. The signal here is one of stability. They're not calling for a boom, but they're not calling for a bust either. At the same time, it looks like they're planning to spend more to make more. Expenses are expected to jump to around $105 billion. And this isn't just because of inflation. It's also because they're pouring money into new technology and hiring to try and stay ahead of the competition. Which kind of leaves us with this one last thought. You've got a bank that is just firing on all cylinders, putting up incredible numbers that suggest the consumer is strong and the economy is healthy, and yet you have its famously sharp CEO telling everyone to watch out for hazards. So the question is, which is it? Is the economy's foundation actually stronger than we think? Or are we just not seeing the cracks that are starting to form? That's the billion-dollar question this whole report leaves us chewing on.